You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again for a little program we call around these parts. This Week in Futures Options, a.k.a. TWIFO, the program here on the network. We're going to break down everything going on over there in the futures options market. So what's going to make it on the show every week? Is it going to be wheat? Is it going to be crude oil? Is it going to be the 30-year? Is it going to be fluid milk? You got to tune in each week to find out. My name, of course, Mark Longo from the optionsinsider.com, as well as, of course, from the network upon which all of you are mainlining these days. If you like what you hear, you did already download or access the show, so you're costing us bandwidth. Throw some stars, throw a rating, whatever platform lets you do. A lot of people liking the old tubes these days. They prefer to get their podcast in a visual format. We got you covered over there on the YouTube channel as well. All of our shows go out there on YouTube. So if you prefer it that way, have at it. Whatever you like, we don't judge, as long as you're consuming the show at the end of the day. We don't judge. And then, of course, if you want more in your lives, and who can blame you, 200-plus episodes waiting for you on the exclusive Pro podcast feed. How do you get access to that? TheOptionsInsider.com/pro. That also gives you access to all the new shows we're doing all week long. So, of course, Pro Q&As and Options Oddities. That's after Volatility Views, Options Oddities. And, of course, get your name in the hat for great giveaways. You get access to this live and everything else we're doing here on the network. Whole bunch of fun. TheOptionsInsider.com/pro. The place to go to learn more as we go around the horn and see who's joining us today for a little bit of fun in the old CME Group hot seat. I am pleased to welcome back our old friend, Miss Carley Garner, the senior analyst and broker over there at DeCarley Trading. Carley, welcome back to TWIFO. It has been too long.
Hey, thanks a lot for having me, Mark. It has been too long, and a lot of crazy things going on in the market, so it should be a good one.
Yeah, should be a good one. So let's get to it. A little bit of the old movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody. Welcome to the Movers and Shakers Report, the portion of the show where we break down everything, lighting it up to the light side, a.k.a. the upside, and to the dark side over there at CME Group this week. And take a guess, take a wild guess which way the data is biased this week, listeners. If you said red, you have not been paying attention. Yes, it's mostly green on the screen this week. We could probably put together a bottom 10 if we really scraped the last couple in there. But outside of that, it's pretty much all green all the time on the screen this week. Not surprisingly, seems like everyone loves everything again post-Jackson Hole. Just buy it all. That's what we're in right now, listeners. So intriguing stuff out there. But that said, Carley, you are our guest. You get pride of place. You get to choose where we kick things off this week, to the light side or to the dark side.
I'm thinking light side.
All right. There's a lot to unpack there. We could probably do a top 30 easy, but we'll keep it to a top 5. Maybe we'll do a top 5 plus. How about that? Because there's a couple that are almost tied for the number 5 spot there as well. Let's extend it, because if it's a top 5, they're all right around 4.5%. So we'll stick in 2 of our frequent offenders and 2 favorites there, because they kind of come in at number 6 and number 7 respectively. Number 7 will be our old friend WTI, up almost 4.5%, 4.45%. That just shows you what a banger week it is to the light side. That doesn't even break you into the top 5. Number 6, one of our frequent offenders, Bitcoin, popping this week, up 4.53%. So a lot of them hanging out right around that 4.5% level. Of course, that approval of that grayscale ETF giving a nice shot in the arm to the crypto markets this week. And then the actual number 5, listeners, at 4.6% to the upside is Platinum. It was number 3 in the same direction last week. So number 3 to the upside last week, up 5.66%. And again, does some paper, 2,900 contracts, but not blowing the doors off. So there you go. You got kind of almost a 3-way tie for number 5, all of them right around that 4.5% level. Then right above it, we got the E-mini NASDAQ, 4.68% to the light side, so taking the number 4 spot. Number 3, remember, we've been talking about these sectors for a while, and no options on these yet, but the futures are starting to trade a little bit more, and they're starting to make their way into our movers and shakers with a lot more frequency as well. Including number 3, we have the consumer discretionary sector of the S&P, up 4.82%. Then we have the tech sector, number 2, at 4.94% to the upside. And then taking the crown this week, not just for the top light side mover, but the largest percentage mover on the tape this week, it is Class 3 milk, up nearly 10%, 9.95% to the upside. It was number 3 in the other direction last week with a decent paper as well. It was off 3.5% last week, and it does somewhere around 4,500 contracts. So nothing to sneeze at, especially when you're talking about dairy. Before I get to the dark side, Carley, have you or maybe your clients over there at DeCarley, have they started to pay attention to take note of these sector futures over there at CME?
You know what, to be honest, I haven't had anyone ask about them yet, but we've had we're juggling a lot of things over here. And so my clients have been pretty busy with grains and softs. Haven't really, honestly, just haven't gotten into that yet, but they will. I'm sure the phones will be ringing soon.
They're sticking to the optionable stuff for now. I get it. I'm down with that. I can certainly understand that. All right, to the dark side we go, and a lot of ags hanging out in our dark side this week, listeners. Pretty much most of the red to be found is in the ags, with the exception of one here. Number 5, we have corn, off 1.95%. Number 4, the lone exception, it is heating oil, off 2.68%. So interesting, though, we have a lot of the energy products in the light side this week. Heating oil taking a break this week. Number 3, it's lumber, so still staying in the ags. That's in the softs, off 4.05%. So this week we do technically have at least 2 of our 3 frequent offenders, Bitcoin and lumber, hanging out, if not exactly in our movers and shakers, then adjacent. So number 3, lumber, off 4.05%. Number 2, Chicago wheat, off 5.3%. And number 1, it is KC wheat, taking a drubbing this week, off about 5.5%. All right, a lot to unpack. Mostly green on the screen this week. Carley, where do you want to begin our journey this week?
How about let's go to the stock indices.
All right, to the world of equities we go.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, you know where to go to find these reports and just about everything else we're going to talk about on the show today. CMEGroup.com/TWIFO, TWIFO. Once you're there, go into that drop down. Then you're going to scroll down from the top in the asset class section. You're going to go down 4 slots to the equity indexes. Then in product family, you're going to choose U.S. Index E-mini. And then from there, we're going to kick things off in the big dog, the E-mini S&P 500. Exactly how big, how robust is it this week? Closing in on 3.8 million contracts right now, so certainly nothing to sneeze at. It's been pretty much all green on the screen. I think if we close green today, and it seems like we're probably heading in that direction, then I do believe it's 5 sessions straight to the upside here. So a lot of green on the screen post Jackson Hole. Folks loving themselves a little bit of ye old equities. Carley, what's lighting up your tape over there at DeCarley this week? And what are your clients calling up about with equities? You know, we saw not too long ago a lot of bearish sentiment. Things were starting to get dragged down. Post Jackson Hole, a lot of optimism out there. What are you hearing? What are you seeing on the other end of the phone out there when it comes to the clients and what they're up to in the equities?
Well, earlier this year in May and June, we were sitting, not we specifically as a brokerage, but all the market participants at the CME trading E-mini S&P were sitting on the largest net short position in the history of E-mini S&P futures. So basically the whole world was short, and we've now learned how that panned out. Usually when everybody's thinking the same thing's going to happen, the market has a funny way of doing the exact opposite, and that's what we've seen. And all those short traders that were aggressively bearish have not all of them, but most of them have offset their positions and are now sitting on very small net short positions. So I think most of the quote unquote easy money, there's no such thing as easy money, but the easy money on the rally has probably been made. We're going to come up against some pretty thick resistance areas, 45.50 in the S&P. We were lucky enough to get on this last pullback. We had some option spreads that did pretty well. We recommended our clients take those off today, take risk off the table, because not only is there a payroll report coming up, but we have a long weekend. Markets are closed on Monday, and anything's possible. It's a good idea if you've made some money on the way up in the stock market to pull some money off the table. Mind your risk. You don't want to ruin your holiday trying to be greedy.
Would be a good way to ruin things on a nice long holiday weekend, listeners, is to have too much risk on the table. Let's see what's on the table right now out there in the E-mini S&P 500. Like we said, 3.8 million contracts. Spoiler alert, we're not going to analyze all of that today. Only a 1-hour show at the end of the day, listeners. But looking here, obviously, once again, everything is near dated, as you would come to expect now in this new era of equity options trading. If you add in the contract expiring in a few minutes and the contract going out tomorrow, you're already at pretty much about 41% of the total flow for this week, just in those 2 contracts. You go out all the way to 5 days, and now you're at about 45%. Add in one more contract that goes out about roughly 5 days as well. You're pretty much at almost exactly 50% of the paper. So yeah, you go out 5 days in this contract, listeners, you have seen pretty much half of the flow going up out there. And again, this week, another one of those weeks, listeners, where it's kind of all the nonsense puts taking up all the oxygen in the room. They came back for these with a vengeance this week after maybe taking a little bit of a hiatus last week. Nearly 90,000 of the 37 quarter puts going up in the E-mini this week. 21,000 today, 68,000 on Wednesday. I normally ignore these things, but there's so much of this week. It's like they came back with a vengeance. That is kind of hard to ignore. 36 half puts doing 50,000, 36.20. These are the ones just going out in about a day. So, I mean, if you add in the rest, it goes down from there. I'm struggling to find the first, dare I say it, relevant strikes and options that are here for some size, listeners. Let's go out a little bit farther. Let's go out a whopping 5 days. 37 half puts going up there as well. 56,000 times. I mean, it's just, it's size puts for days. So kind of interestingly, you think in a week where we have been mostly popping hard to the upside, you would see a little bit more of a call frenzy maybe going up in some of these contracts. And we did see some. If I dig down a bit, I could find, looks like the 45 half calls going out pretty much today, did about 30,000 contracts. Half of that today, 15,000. So maybe some folks taking those off the table today. 9,000 on Wednesday, mostly closing there. 3,800 on Tuesday, 2,000 on Monday. So it looks like back and forth opening to closing on these 45 halves. Again, expiring in about a few minutes here. And then if that's too far for you, 45 35s doing about 22,000 contracts this week. Again, almost all of that today, 18,000 today, about 2,000 on Wednesday, and not much the rest of the week. So those starting to come to life as we're kind of whipsawing around those strikes. You know, it's interesting. We've had a lot of questions, Carley, about just maybe not this week because it's been mostly upside, but prior to this week, we saw a lot of intraday whipsaws going on out there in the equity markets. S&P starts off up 0.5%, and then by mid-session, it's down 0.75%, and then it ends the day kind of unched. And that's been kind of the name of the game for the better part of the last few months. I'm curious if A, if you've noticed that, and B, what do you attribute that to out there?
I have noticed that a little bit, and I mean, I think a lot of this is just, I try not to overthink things. I think a lot of it is just summer markets, the volume's thin. There are some speculators dabbling, but the buy and holders are kind of on vacation. And so you get a weird dynamic during summer markets. I think if things normally pick back up after Labor Day, so I think we'll start to see more normal price action once we get past Labor Day. I'd like to clarify on a comment I made just a few minutes ago. I'm not necessarily bearish the S&P. In fact, I actually continue to be bullish, but I think seasonality's a little bit shaky this time of year, so I wouldn't be shocked to see another retest of like trend line that would put us down around 43.75, somewhere in there. But I think we're in a buy the dips market. I think it's a bull market. I know the world most people generally, especially retail traders, tend to be overly bearish for many good reasons. But I think that's probably exactly why we go higher. Plus, if we see the U.S. dollar roll over and sell off, which I think is in the works as we speak, and we see interest rates top out and treasuries rally, that alone, regardless of anything else, is going to pull stocks higher. And I think that's probably the environment we're most likely to see as we get into the later part of the year.
You know what it was that was the true catalyst for all this upside we've seen over the past week, Carley? It's your buddy, Mr. Russell Rhodes. He came on here about a week and a half ago and said he's full in short this market now. And that was it. That was the catalyst. That was the turning point out there. Second he said that, it's been off to the races ever since. So this market fading your buddy, the once and future and now present Dr. Vix.
It happens to the best of them.
Yes.
Trust me, I've been there, done that.
Yes, it does. By the way, I got so excited at the top of the segment here, I've neglected to break down the vol. Obviously, vol coming in across the board, including in equities. We are heading into a long holiday weekend after all, so folks tend not to want to hold vol as it slips through their fingers towards the end of the week, and they are coming for VIX. VIX, when we kicked off the show, 13.5 listeners, down a little over 3, about 3.1 points. VVIX also getting annihilated. Back just a couple of weeks ago, back in the Jackson Hole time frame, we were talking about triple digits, if not a little bit more. VVIX, of course, the volatility of volatility, listeners. That is down about 20 points, 81 right now. It's down another 8 points just since last week. So they have really annihilated the volatility of volatility itself. So the market, at least for right now, pricing in a whole lot of nothing going on. Vol Q at about a 17.10, down nearly 3 points, about 2.9 points from this time last week. That puts that spread, that VIX to Vol Q, so that S&P 500 to NASDAQ Vol spread right around 3.5, about 3.6 points, a little bit wider, about a quarter of a point wider than it has been hanging out of late. So there's your Vol rundown out there. I'm scrolling for some more interesting upside paper. Looks like we had the 4600s that expire in about 15 days. That's a little bit farther out. They went up about 17,000 times this week, and those were trading more actively throughout the week. So it wasn't all today. It was 5,200 today, 5,500 on Tuesday, 4,000 on Wednesday, and about 2,000 on Monday. So there was some upside action kind of steady throughout the week. You just got to go a little bit farther out to find it. You got to get past the explosion of near-dated puts, and then you can find a little bit of call paper smattered in there as well. But, I mentioned there was kind of a battle for the number 5 spot to the light side this week, including our old friend WTI. I know Carley likes to have a little bit of energy, so I think we're going to head out into energy next.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, welcome to the wonderful, the topsy-turvy. This week, very green world of energy. go into that drop down from the equity indexes, listeners, and scroll up just one slot to energy. It's an alpha order list after all. In the product family, you're going to go to crude oil. We're at the top there and going to select WTI. Coming in, you'll see a level, probably a lot of you when you go to the pump, not like in 83, almost 83 and a half right now, about 83.43, up about 3.6 handles or about 4.5% on the week. So yet another week with a bit of upside here in WTI, back north of that 80 level that I know a lot of people keep an eye on out there. Also a decently robust week for coming into a holiday weekend, 431,000 contracts on the tape. So folks are out there trading up some WTI. Carley, what's lighting up your tape out there in the world of the Texas tea this week?
We do have some technical resistance coming in crude oil at around $85 a barrel. I personally think we're probably going to break it this time through. I think the first time was just kind of a knock on the door. I think the door opens the second time. And I think we could see crude oil print into the mid to high 90s, maybe even triple digits, low triple digits. I'm not looking for anything real crazy. I'm not calling for 300. I saw an article today, someone calling for 300. I don't think that's in the cards. But the reality is dollars probably heading lower. Interest rates are probably tapering. And also, if you look at the COT reports, speculators are long, but they're not that long. They're holding a fraction of the net long position they normally have. So there's a lot of buying power. If we break 85, I think a lot of that comes into the market.
Wow, look at you looking for more upside. I'm sure very welcome news to all of our listeners out there looking to fill up their massive SUVs with dinosaur juice out there. But yeah, so what time frame are you looking at for that triple digits? How long in the future you think?
Well, I mean, these things take time, and it's not a straight shot. Usually the oil market generally peaks out in October. So I would say sometime between now and October would be kind of a reasonable expectation and time frame. So we've got a couple months to work with.
Interesting. Triple digit levels back in WTI. You heard it here first from Carley on the show. So send all your hate mail to Carley for talking up the price of filling up your car. Obviously, this week, a bit of an aberration out there in WTI as well, listeners. Of course, we got hurricanes and other things going on in the Gulf. That always tends to gum up the works on the energy front. But again, a robust week. I said about 431,000 contracts on the tape. Unlike an equity, it's refreshing because about almost 50%, about 45% of that paper going up in the contract that still has 15 days to go. An eternity in the equity world. So let's go out there to the October contract, see what's hanging out there. What is vol right now, you might be wondering, in good old October WTI? It's about 26, off about 1.5 points this week. So coming in a little bit. Still frothy, but coming off the mid to low 30s that I was hanging out at, I should say, not too long ago, but still obviously pretty much double what we're seeing in S&P land right now, fixed at about a 13. So intriguing stuff out there. Skew-wise, last week, it was all about the puts. 3.8% bid with the puts. The calls, nobody wanted them, 1.6% cheap. That has exacerbated in both directions this week, which is kind of interesting. Nearly 7% bid to the puts and about 5.6% bid to the calls. Now, some of that could be the skew action as you move up from a price perspective. You expect to see that call wing maybe come in a little bit, the puts to get a little bit bid. So that could be just normal rotation, but it could also be maybe some folks getting a little bit spooked at these levels, maybe concerned about a little bit of downside. We see as we go a little bit farther out, September, go out to December, you're seeing a 10, 11% bid to these puts. So interesting stuff. Carley, does that give you any pause in your prediction that we're seeing such a strong bid for the puts here in WTI, or is that kind of what you expected?
I'm not sure I expect anything, but it doesn't shock me. I mean, the market's in a downtrend overall. If you look at a weekly or monthly chart, it's definitely in a downtrend. It took a lot of convincing for, a year and a half ago, everyone was bullish. Now everyone's bearish. That's kind of how markets work. But I think some people might be in for a surprise.
Well, certainly if this skew is to be believed and Carley's triple digits prognostication comes to pass, going to be some probably perplexed people out there. Let's go out to where this paper is lighting it up. Like we said, it's in October. It was the October 85s leading the dance this week with about 20,000 contracts. 6,700 today, 5,400 yesterday, 4,400 on Tuesday, 3,100 on Monday. So ever increasing as the week went on and we got closer to that 85 handle. Intriguing stuff out there. It's like opening in the latter portion of the week, closing earlier in the week. So that's kind of interesting. Usually you see it the other way around. They put it on earlier in the week, and as we get closer to the strike, they take it off. But intriguing stuff there. Right behind it, we do have some puts to be found. We have the 75 puts doing about 14,000 contracts exactly. The big day for those actually yesterday, 4,400 yesterday, 3,600 each Tuesday and today, and about 2,400 on Monday. This is another one kind of back and forth, opening to closing all week long. Right behind it, we do have some 90s. So if you're looking for some triple-digit WTI, maybe in the next couple of weeks, then maybe the 90s in October are up your alley. They did about 14,000 contracts this week. The big day again today, 6,500. So the paper today in the 85s and the 90s, eerily similar from a volume perspective. So maybe a bit of a vertical, maybe a bit of a roll going up there. Yesterday, similar numbers as well, about 5,300 each. So maybe some vertical / roll action going up. Wouldn't be surprising. We are pretty much right at that 85 strike now. So maybe some folks keeping the party alive and rolling up to the 90 strike. And then 1,300 on Tuesday, not much on Monday. So intriguing stuff there. You know, with the energy, we always like to dig around a little bit, listeners, as well, see if we can find any interesting nuggets or surprises lurking out here. 90s also pretty active in December. About 8,000 of those going up this week, probably as expected. A little bit of longer-term upside, kind of the name of the game out there in WTI. Also, the 80s doing about 7,000 contracts as well in December. And again, similar volume today and yesterday. So maybe we are getting some rolling. Of course, it was closing on both yesterday. So maybe some folks just bailing on upside across the board in December. Maybe they got the move they wanted, and they're getting the heck out of Dodge, or they're short the heck of the upside, and they got spooked out of it. Either way, they were taken off. A lot of 80s and 90s in December this week as well. A little bit farther out just to see listeners. And yeah, we have 75 puts going up in March of next year, 3,300 times, and 90 calls kind of across the board as well. Maybe if you want a little bit closer about the November 85s, a little bit closer from a duration perspective and from a strike perspective. They went up about 5,500 times this week, the big day. Tuesday, 2,000, 1,500 today, about 1,500 on Monday. It's like opening all week long. So folks opening this week on the Nov 85s in WTI. And Carley, I know you like yourself a little bit of nat gas, and since we're hanging out in energy, we might as well fire that one up as well, listeners. Go down from that product family, go down 2 slots to natural gas, and then we will be off to the races there as well. Not in our movers and shakers this week, but an interesting week as well. 277 when we're kicking off the show. We're here up about 11 cents in nat gas this week. Carley, I know that's one of your favorites out there, nat gas. I know a lot of your clients love themselves a little bit of nat gas. You had a good call recently with those SEP 3s. They worked out pretty well. What's catching your eye out there in nat gas this week?
To me, it looks like the market is putting in a really big, long, and basically painful base for anyone that's long the market. But I think the patience will be rewarded at some point this winter. We're probably almost sure to have some sort of weather scare, and prices are low enough that any type of weather concern could really get things moving. So one way to maybe potentially consider playing it is just simply buying some cheap calls. So you have a foot in the door. They're really cheap now because the market's been trading sideways, and you never know. Maybe it'll work out.
Indeed. Let's see what's working out there from an options volume perspective. And you know what? Not a huge mover week for WTI, or I should say for nat gas, but a pretty active options week. Usually we expect levels somewhere around what we saw in WTI, 400 to 450,000 contracts. Right now, 561,000 contracts. So folks are slinging some WTI. Maybe we should add into our movers and shakers, not just a percentage underlying move, and maybe some sort of volume comparison as well, because WTI, I keep saying it, nat gas, putting up some numbers out there this week. And nat gas doing its best equity impression as well, because all of that paper going up in the front contract. This time it's a monthly, though, so it still has 26 days to go. So it's the front contract, but it's not quite as near dated as your traditional equity. Still 60% of the paper going up in the October contract. So everybody wants to get very close to the fire. They want the highest gamma contracts possible. And right now, what is the vol here in nat gas coming in again this week? It's about a 63 right now, off about 3 1/3 points. It's still, when you compare it to what we were just talking about, 13 in equities, 26 in WTI, it seems like an explosion of volatility out here in WTI, or excuse me, in nat gas. I keep saying that, in nat gas this week. Even though we have obviously seen nat gas much higher, triple-digit vol, not too long ago. So 63 is actually kind of, maybe you can argue, a little bit of the sweet spot for vol out there, maybe even a little low. But compared to a lot of the other products we're going to talk about today, it still seems like just a enormous amount of volatility. In terms of skew, kind of an interesting week. Not much going on out there, unlike what we saw in WTI. The puts last week, 2% bid. The calls literally flat. This week, the puts 1.6% bid, and the calls still kind of literally flat, slightly discounted. So not much going on out there in the skew. If you scroll out a little bit, though, you get out into Q1, early Q2 of next year. Remember, nat gas obviously has a lot of seasonality to it. And we get some interesting shapes to the skew. We get some pretty impressive discounts to the puts and bids to the calls in the February and March timeframe of next year. The puts in February of next year are 7.4% cheap. The calls 9.2% bid, and the calls are 10% bid in March. So obviously seasonality, an interesting thing, very pronounced thing in nat gas. And right now there's a huge bid in that Q1 timeframe of next year. Not so much right now. The market right now is saying we're going to be hanging out here right around 2 3/4 in nat gas, at least for the foreseeable future. In terms of action, it was all front month all the time, listeners. I said we're hanging out right around 2 3/4. It was the 2 1/4 puts leading the dance this week with about 40,000 contracts this week. So that's pretty much more than the entirety of the silver complex just in that one contract this week. Looking at the big day Monday, 9,000 contracts. Actually, I take it back. The big day was today, 13,000 contracts today, 9,000 on Monday, 8,000 on Tuesday, about 8,000 on Wednesday as well. So pretty steady paper on those 2/4 puts pretty much all week long. Right behind them, we have 38, almost 39,000 of the 2.5 puts. And now, before you jump to conclusions that it's all rolls and verticals, the paper doesn't quite line up 1-to-1, but it could be foreseeable that there is some rolling or vertical paper in there. We have 18,000 of the puts going up today, 8,000 yesterday, 5,000 on Tuesday, 7,600 of the 2.5 puts going up on Monday. Again, kind of back and forth, opening to closing. Doesn't quite line up with the rolls or verticals, but I could maybe see some arguments for those. Right behind them, we have the 2 puts. So if neither of the 2.5s or the 2/4 puts are out of the money enough for you, allow me to present the 2 puts. 35,000 of those trading this week. The big day for those, actually Monday. That's kind of interesting. 12,000 on Monday, 9,000 each Tuesday and today, and about 5,000 on Wednesday. Opening on Monday and then closing pretty much the rest of the week. So intriguing stuff there. A bit of a put palooza going up here in front month this week. We got to go all the way down to pretty much the number 4 spot to find our first call. And it's the 3 calls. Carley's former favorite. 28, almost 29,000 of those going up this week. 10,000 today, 5,000 each Tuesday and Wednesday, and about 8,000 on Monday. Closing on Monday. It's like pretty much back and forth all week long, actually. So an intriguing paper to be found here. Carley, any of that come as a surprise to you? A whole bunch of puts going up in nat gas, and the fact that, at least for right now, the skew is telling us we're not going to be doing a heck of a lot of anything. Get out to Q1 and next year, though, a little bit of a different story.
It doesn't shock me. I do think, although I'm long-term bullish nat gas, this is a really tough market. It has a very nasty habit of wiping out, weak-handed longs before it goes up. So I honestly think, even though I think ultimately we're going higher, I think at some point we have a pretty good shot at wash out that puts us somewhere around 230, 235 on the front month in nat gas. So there's definitely some room on the downside. I personally, because of my long-term view, I'd rather wait to get more aggressive on a dip as opposed to trying to play the downside from here. But, there's more than one way to skin a cat.
Yeah, that makes sense. Seems like the market is content to kind of hang out here for a little bit and then maybe wait for something else to happen. By the way, if you're wondering what the strip of the week is, looks like it's the 6 calls this week, listeners. They go up from April all the way out to the end of the year about 1,450 times. So for whatever reason, that is your strip of the week out there in nat gas. All right, Carley, we hit on equities, we hit on WTI, we hit on nat gas. What other products are lighting up your tape this week?
How about the grains? Let's take a look.
All right, to the worlds of ags we go, listeners.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, listeners, welcome to the green thumb world of ags. pop out of the energy, go up all the way to the top of that asset class list to agriculture, then right across grains and oil seeds and product family. And then from there, we have an embarrassment of riches. I said the whole dark side this week is pretty much ags. You got corn at number 5, lumber at number 3, and then Chicago and KC wheat holding down pretty much the 1 and 2 spots respectively out there. So a lot to be found. I guess I'll let you choose which ags you want to start with, Carley, because there's a lot lighting up. You want to go to wheat first? You want to go to corn? Somewhere else? What's catching your eye out there?
Let's talk about wheat.
It's like we're on the same wavelength here because I've already pulled up Chicago wheat. It's like we've done this show before together or something.
Perfect.
Carley. Yeah, Chicago wheat coming into Showtime listeners, 601 and a quarter, off a little over 20, about 20 and a half points, or about 3.3%. Like we said, ags, some of the few things you can find that are red this week. So interesting stuff out there. 85,000 contracts on the tape. So a respectable week, all things considered. And nearly half of that, about 45%, going up in the D's contract that has about 85 days to go. So we're going to hang out there. The vol right there in December, about 31 and a quarter. So off about nearly 2 points, about 1 3/4 points. So again, the ags are outside of nat gas and WTI to a lesser degree. The ags are one of the only other complexes where you could look and find at least respectable vol levels in the mid to low 30s. So wheat delivering this week, even if it is coming off a little bit this week. And in terms of skew, last week, nobody wanted the puts. They were 8.6% cheap this week. They are nearly 12% cheap, so they continue to get discounted. The calls last week were all the rage, 16.3% bid. That is still the case this week, 16% bid. So the calls remain firmly bid. The puts remained firmly offered, and yet we are falling out of bed 20 handles this week out there in all things Chicago week. So again, shows you skew is not necessarily a mystical voodoo prognosticator. Just because the puts are offered and the calls are bid doesn't mean we're poised to explode to the upside. It just means that's the way the options flow is lining up. Carley, a lot to unpack. What is catching your eye out there in Chicago wheat this week?
Well, we've gone from a scenario about a year and a half ago where everybody assumed that the world was gonna starve. We weren't gonna have enough wheat to feed everybody. Prices were wildly high, and now we're at the exact opposite end of that sentiment. Nobody wants to talk about wheat. It's no longer in mainstream media. And it just so happens that wheat's coming down against some really long-term support areas. The December contract's near 6. I think somewhere around $6 to $6.80 is very likely to be the floor. I mean, I could be wrong, but that's what my charts are telling me. And we're in a situation where most speculators and most market watchers are bearish. And that to me, it feels like we're ripe for a pretty big short squeeze, if not something more. And we should also keep in mind, we've completely wiped out all of the Russia-Ukraine price premium out of the market. And I'm not sure we should have wiped it all out. So we like the upside. We've been advising our clients to play it with bull call spreads with naked legs. So basically buy a vertical call spread using March options and then sell a put to pay for it. And that way we can put together a trade depending on how aggressive you want to get with like $1 of profit potential. That's $5,000, and risk below, depending on how aggressive you want to get, somewhere 570, 580 risk below that, which on the March contract, that's about 60 cents under the market. So there's plenty of room to be wrong. And as long as wheat doesn't fall out of bed, we should be in good shape. If it goes higher, like we think, there's some pretty good profit potential. Margin on something like that's about $3,000, but you'd probably want to keep a lot of cushion in account to do that sort of strategy. Probably want at least 5, probably more like $10,000 allocated to the trade.
Yeah, that's interesting to me because you're right. It does seem like they have dispriced all of the Putin premium right out of wheat again, right?
Right.
You might just think maybe we keep a little just for a rainy day. Right. You never know. When the sabers start rattling again, there goes wheat again. You know, it just seems like they are just whistling past the graveyard out here in wheat, and hopefully they're right, but you never know out there.
You're right. And, Putin has a history of talking markets up. And so if things start to get cheap, he feels it in his pocketbook, and it's time to say something to rile things up. So let's see.
Yeah, grain deal's on again. It's off again. We're going to blockade the Black Sea. All kinds of fun could happen at the drop of a hat out there. So yeah, I had the same thought when I saw these price levels. I was like, I don't know if I'm that optimistic about everything going on in the wheat world right now. Let's get out there. Let's see what's going on right now in the wheat world. Like we said, nearly 50%, about 45% of that nearly 100,000 contracts going up out here in the Dees contract here this week, so we'll hang our hat out there. The most active contract in Chicago week this week are the par calls, the 700 calls in December. Folks like themselves a nice December expiration in the ags. It just lines up well for a lot of them out there. Nearly 6,000 contracts this week, trading pretty evenly all week long, with the exception of Wednesday. 2,600 today and 1,500 each Monday and Tuesday. It's like opening all week long, so maybe some folks taking some of your advice and leaning to the upside here, Carley, opening a ton of the 700 calls in December in wheat. And then let's see, right behind it we have looks like about 4,100. So if the 700's a little bit too optimistic for you, how about the 6 halves? They went up about 4,200 times this week. 1,500 today, 2,200 on Tuesday, and then not much the rest of the week. So a couple of big chunks accounting for most of that paper. It looks like mostly opening on Tuesday. Who knows? Probably opening today, but we don't know for sure. So interesting call paper up here. And then if all of that is just not even remotely optimistic or just far enough out of the money for you, how about the 850s going up 2,700 times this week? 1,300 times on Tuesday, 1,200 on Wednesday, and that's pretty much most of it there, mostly opening both of those days. So opening paper on the 8 halves in December as well. So we're seeing paper all over the place out here, listeners, which is kind of fascinating. Given the fact that we've been selling off pretty aggressively, you might expect to see a few more puts on the tape, but that's not really the case. We see 900 calls in March going up about 2,000 times this week, trading pretty much every day except for today. A whopping goose egg today, but 500 to 650 every day the rest of the week. Interesting stuff out there. So the 900s in March of next year. Wow. Hopefully we don't see a revisiting of those levels, but intriguing stuff out there. And then if we get a little closer to home, we got the 650s going up. Looks like these are the October week 3s going up about 2,200 times. Again, trading pretty steadily all week long. Looks like mostly people closing on these, about 1,000 on Tuesday, 800 on Wednesday, a couple of hundred today. So folks bailing maybe on a lot of these 650s in October. So interesting paper kind of across the board out here. And since we're talking ags right now, and a lot of ags are lighting up our dark side, pretty much the only thing lighting up our dark side this week, let's head on over to the big dog of the ags complex as well. Let's talk a little bit of corn, go into that product drop down, listeners, go up to the top of the list. You'll see corn. It's kind of hard to miss out there right now. Corn right now, listeners, $4.79 and a quarter, off 8 3/4, nearly 2% on the week. Kind of the same deal, pricing in a lot of just easy going for the next few months out here, at least in corn. Decent amount of paper this week as well, about 351,000. Of that, about 42% going up in the Dees contract. Once again, has about 85 days to go, so we're going to hang our hat out there. The Dees contract, what is corn vol in December? 22.5, off about half a point. So not quite as robust as what we were just talking about, but still respectable, all things considered, especially when you see, again, VIX hanging out at 13. 22.5 seems like a mountain of vol out there. Carley, what's catching your eye and the eyes of your clients out there in the big dog in the ags complex this week, corn?
Well, corn's been pretty quiet recently. I do think that we're due for some fireworks going into harvest here, not few weeks down the road, and generally you start to get some selling pressure as we go into September, October. So far we've held support. Trendline support in December week comes in right around 470 at this point, and that has been holding, but my guess is there's probably, unfortunately, a lot of unhedged farmers that are going to need to sell what's in their bin, and they might get nervous about the upcoming harvest they've got. I bet prices probably go to 450, maybe even 440, somewhere in there, just as we break through support, and also speculators running some sell stops. That said, I think in the big picture, if we do see those areas, they're going to be really good opportunity for the bulls. So I'd be willing to be an aggressive bull down around 450, 460 in December corn. For the moment, though, the grains are the type of market nobody sends a memo, nobody gives you a heads up when things are going to turn. They turn fast. So we've recommended that our clients buy really cheap March corn call options just in case something happens before we're ready to get a little more aggressive. So I think it's a time to have a toe in the door or a toe in the water, but not a time to get aggressive. But eventually things will turn around and head the other way.
I like that. The grains can turn on a dime and you get no notice unless you're listening to this show. and listening to Carley, in which case, there's your notice. Right. Consider yourself forewarned and forearmed here, listeners. Let's go on out to a little bit more of this paper. I said about 42% of the paper in corn this week was going up in the December expiration cycle, but the leading contract was actually the 500, the par calls going up in October. They have about 22 days to go, so we're going to hang out there. About 12,500 of those going up this week. The big day today, 4,200 today, 3,500 on Monday, 2,700 on Tuesday, and about 2,000 yesterday. Closing earlier in the week and then opening the rest of the week, it seems like. So intriguing stuff. We're hanging out at about a 480. So intriguing strikes out there. Then we go back to October. Right behind it, it was puts, which probably more along the lines of what you expected given the sell-off we're seeing out there again this week. The 400 puts in December doing about 12,000 contracts this week. The big day for those actually Tuesday, about 5,000 going up on Tuesday, mostly closing there. So some folks getting the heck out of Dodge on their 400 puts on Tuesday, 3,700 on Monday, 2,700 on Wednesday, only a few hundred today, so not much paper going up today. And right behind it, just about 70 contracts fewer, 11,900 of the 450 puts also in December. And not quite 1-to-1 for rolls, but it could line up that way. It looks like maybe Monday, they're talking close to 3,500 each on Monday. We saw 3,500 on Monday, 3,500 on Wednesday, 3,600 on Tuesday. So kind of even paper all week long, except for today. Today only 1,300. And closing most of the week as well. So maybe some folks, if they had 4 half puts, given this sell-off, or breaking through 500, maybe taking some off and rolling down to the 400 strike. We've seen crazier paper out there. And if those are not close enough to the fire, the 480 puts going up about 11,000 times this week. The big day, Monday, 3,400 there. Actually, take it back. The big day was Tuesday, 4,400 on Tuesday, 3,400 on Monday, 1,800 yesterday, and about 1,200 today. Back and forth, opening to closing on these 480 puts. That makes sense. These are now pretty much the at-the-money puts. So we're going to see the volume and the OI fluctuate as we dance around that strike for a little bit. Let's go around a little bit, see if we see any other interesting and or aberrant paper lurking in the weeds out here. And the answer is no, unless you consider the 510s in March of next year going up 6,300 times to be pretty crazy. Also, 510s pretty active in May of next year as well. So 510 strike appears to be popular, going up about 6,000 times in both of those months. So we hit on ags, we hit on equities, we hit on energy, we hit on a lot of stuff here. We kind of come up against it. Want to make sure we get some of you folks on the show as well. So without further ado, let's head on into a little bit of the old futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, let's get out to your feedback. We'll get to our question of the week in a second, but Carley, it seems like you're making fans of our listeners here. One of our pro members, Age Delaquarius, usually listening live. He says he's working nice. He says, I'm too busy at work for the live, but when he heard your comment about triple-digit crude oil coming in the near future, he said, I've got to hear this show because I respect Carley Garner greatly. So there you go, Carley, making fans of our audience here one at a time.
Well, thank you. I like to ruffle feathers.
I knew that triple-digit crude would get some attention out there, Carley, and it certainly seems to be the case. Let's get out to our own questions of the week. We like to shine spotlights back on you folks as well. Last week, we asked you a question we've asked you a couple of times now throughout the year to gauge your sentiment. The last time we did it was back in May. We asked you, hey, in these troubled times, where are you allocating the majority of your portfolio? Back in May, about 44% of you, pretty close to it, chose cash. This time we asked the same question. We said cash, fixed income, equities, or commodity/crypto. Where are you allocating the majority of your portfolio? And it was an exact tie, which doesn't happen very often, listeners, between cash and equities, 35.7% each, Fixed income coming in a distant number 2/3, 19%, and commodities/crypto bringing up the rear, only 9.5%. Carley, does that surprise you that so much of our audience is pretty much can't make up their mind between cash and equities right now?
No, doesn't surprise me. These are some tough calls. I'm a little surprised that we don't see more being allocated to fixed income. I know it's been a dog for the last couple of years, but I was actually just made aware of a stat that the Treasury market hasn't settled negative 3 years in a row ever, or it might even be 2 years in a row ever. So anyway, we're in a situation that we've never been in before in treasuries. And my guess is at some point it's going to pull out of that, and that's going to end up being a really great trade. Hasn't happened yet, but eventually it will.
Yeah, I was a little surprised to see not much love for fixed income either. I thought it would at least get, 25%, but nope. We pulled it out into its own category because the last time we asked it, we kind of lumped it in with crypto and everyone got mad at us. So how come no separate category for fixed income? So he pulled it out for its own category, Carley, and only 19% of them wanted it. So I don't know. You can't please everyone, apparently, out there. This week, our question of the week, listeners, is looking back 10,000 foot at the overall equity options market this time and asking you quite simply, which product do you think has had the largest overall impact on the old equity options landscape? Gave you three choices and the infamous other, VIX, and then just your traditional weekly options, or the new flavor out there, the flavor of the week, month, call it what you will, daily options / 0 DTE, or you can write in with your own. Carley, what are your thoughts? Which of these products to you has had the most impact on the world of options? Maybe there's a write-in. Maybe you want to write in nat gas ladders, in which case, have at it. The floor is yours.
No, I think it's the VIX. I'm going for that.
You think our audience is going that way as well?
We'll see, but I think so, yes.
All right, we shall see indeed, listeners. If I could find our poll, there it is. And right now, everyone, it's the flavor of the week, listeners. It's the flavor of the week, Carley. Flavor of the month, call it what you will. It's daily 0 DTE. They're all about it. 52.8% saying the daily. I mean, it's kind of, I could see why people would say that, but it's kind of hard to argue that when they're really only had about a year in their back pocket, right? It's kind of hard to argue.
Right.
Maybe in the future that will be the answer. Right now, kind of hard to argue for that, but hey, that's what they're choosing. 32.1% only for the VIX, and then the weeklies are bringing up the rear, 15.1%. Not a single vote for other. No love, no write-ins for Carley's favorite, the nat gas ladders. All right, listeners, that is going to do it. If you want to make your voice heard, you got about a little less than a day left. At Options is the place to go to find that poll out there, listeners. But Carley, a lot of fun out there. A lot of people are responding to your call for triple-digit crude, so I expect your phone to ring after this show, Carley, which is a good thing, right? That's what you want.
Yeah.
At the end of the day,
I'll either look really smart or really dumb. We'll find out.
And if folks want to ring your phone, or maybe perhaps more apt in the digital age, hit you up on social media, where should they go? What should they do?
Well, the best place to find me is our website, DeCarleyTrading.com. It's DeCarley trading.com. We are a brokerage service, a boutique brokerage service. We offer everything from full service to discount online. We'd love to have you. If you're on social media, my handle is @Carley Garner on Twitter.
There you go. Check her out at Carley Garner, all one word. If you follow us on Twitter, you'll see we retweeted some of her stuff out there. You can find her handle there. Good stuff throughout the week when she's not appearing here on this show. And of course, you know where to go to see all these reports, all this data for yourselves. Why? Because we like you folks. CMEGroup.com/TWIFO, TWIFO, the place to go to kick the tires and light the fires on all this paper and a whole bunch more we didn't have time to get to. If you want to sink your teeth into Class 3 milk at 2 a.m. on a Saturday, have at it. No one's going to judge. These reports are running all the time. CMEGroup.com/TWIFO, the place to go to get access to them. That's going to do it for us today, but we're not done yet for the week, listeners. We're back again tomorrow. All you on-demand folks, noon Central, 1 p.m. Eastern for Volatility Views. After that, exclusively for our pro members, we have Options Oddities, breaking down a crazy week from an unusual activity perspective. Always see we can get ourselves into a little trouble there with some fun trades we have our eyes on. Obviously off for the Labor Day holiday on Monday, but then back again with our regular allotment of shows throughout the rest of the week until we're back again next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.